Hi guys, this is Craig the Options Linebacker. This is the weekend report for Sunday, August 1st. I'm going to keep today's video rather short and to the point because we're still at a major inflection point of the market and we could see a relatively big move here pretty soon. So let's just kind of lay out the parameters for that and what's causing this inflection point. I'll start out with a monthly chart on the S&P 500. You can see that we're still in somewhat of this secular bear market, which is a longer term bear market. Really, you can make the case that we've been in a bear market since year 2000. But in this specific one, where we've gone from a higher high to a lower low during the 2007 to 2009 bear market, and we've gone into a cyclical bull market over the past year and a half or so since March of 2009. But very conveniently, it stopped at the 61.8% retracement, which is where it should have, since it's under the influence of a larger bear market. And what we're looking to see is whether or not this is going to roll over into the second half of the secular bear or just keep on going higher. Now, the thing that we're going to see before it does roll over is we will see that lower high show up on the monthly chart. Just like what we saw back in early 2008, we saw that lower high set up before things really fell to pieces. So far, that has not shown up. We've just had a 38% correction off of the cyclical bull, and it worked nicely to the upside in the month of July. You can see that nice candle there. But when we move to the weekly chart, things get a little less clear. Here's the weekly chart on the S&P. Now we've made 5 waves up on this cyclical bull. There we go. And you can make the case, this is very subjective, but you can make the case that we've seen an ABC correction as well too, coming down to the 38.2% retracement. All very neat and clean and very orderly, right out of a textbook, right? But this is, if this is the wave one, the new impulse wave to the upside, it's not starting off with a bang. This is where we'd expect to see it just take off to the upside, and so far it's not done that. You can see that this last week here was just a little doji. If we zoom into the daily chart, there's some positive things happening here. We've had a descending channel breakout to the upside a couple of weeks ago, so that was a positive thing. We've certainly had a nice positive move up off the bottom, which is around that right around the beginning of the July time frame. We moved strongly off the bottom. But if this is the first wave, the first impulse wave higher with a second wave corrective, wave 3 is supposed to be the long one. This is because all the shorts that tried to go short here, tried to go short here, tried to go short here, finally got their textbook entry to go short right around here. This is where longer term bulls picked it up and said, okay, enough, we've had enough of a correction, let's see if we can push this thing higher. And if enough weekend bears go short here, we should see a dramatic short squeeze higher that should have gotten us up to around at least 1140, 1150 price zone. Well, it didn't make it up that high before it had a reaction, so there was a lot fewer people shorting at this area that got pinched to the upside, and that also means that there's a lot fewer longer term bulls that went long here. Certainly there was an imbalance of demand versus supply, which is what led to this impulse wave in the first place, but it's shorter than it should be. My concern here is because of this little stunted third wave is that unless the price gets it on early next week and really tags one up to the upside, all right, we could see a potential short final wave here, which is going to look something like this. It's going to set up that lower high on the daily chart, which is going to set up that lower high on the weekly chart, which is going to set up that lower high on the monthly chart. So everything starts to tag together and unfold. And so this is very important that this week the price really tags on a big one to the upside with some big time supply demand imbalance. Otherwise, if it just kind of hangs around in this area, we may see a very quick drop at the beginning down to S&P 1010. That would be the initial move. We'd have to see where it goes from there, whether or not it's going to double bottom in this area on the weekly chart and then go higher from here, or whether or not this is the beginning of another weekly series down. Now, I don't think there's anybody that knows with any kind of degree of certainty as to which one of these two is going to unfold, whether or not it's going to go higher from here or kind of fall apart and go lower. People have their own biases. They have some guesses. There's some fundamentals that are driving this. Fundamentals have been ignored for the better part over the last few weeks. This is why I'd say it's much more important that you know what you are going to do with your own positions, whether or not the price goes higher from here, the price walks sideways, or the price drops from here. That's what you can control. You can't control which way the market's going to go, regardless of how many contracts you sling out there. Knowing how you are going to respond to how the market acts is the key towards this style of trading. A quick word on position management. We are now into the September cycle. We have a put spread in play. Down here, we are looking for a little bit more of a bounce, if that does occur, so that we can put on a call spread for the month of September. Otherwise, if the price drops from here, we'll also have some call spread activity setting up if certain levels are reached. So that's it for today. Hope you guys are enjoying your summer, and we'll catch you next weekend. Take care, folks.